Hello traders, Gary Wagner here, approximately 12:15 in Honolulu, making it 6:15 in New York City. It is Thursday, the 5th day of April, 2012, and this is the daily report for gold and silver. As we go into the close of this market for today's morning session, we are coming off of the highs. There is no doubt about that. And we currently have gold off a little bit. It was up most of the day. It had a high of 1633. The low is 1620, and current print is about 1628, 1629 in that area. You've got a nice showing in silver, currently trading up about 38 cents, and you can see it's been trading anywhere between 31.68 is the current print, but in terms of the range today itself, 31.18 to 31.91. Traders, of course, the real question is whether or not gold is going to hold a critical level. That level is about 1600. But I believe that there are a couple of different levels of support that are really important in the market. To me, one of the most important levels is this 1621. Why? Because the 1621, when we consider this major move that we had up here, we had our top just below 1800, 1520, that move. And then you get the 61% retracement, roughly around 1621, 1622. And that, to me, is a real critical area that gold absolutely has to hold. If it can't hold that, it might go ahead and test the lower numbers. My personal sentiment right now is that it probably will not. But anything can happen in this market. On a technical basis, when we look at it, and we do have a misprint because I'm showing Kitco's low not quite as low as this particular candle is right here. But we do have this market that has been under pressure. But most importantly, what we are seeing at the same time is real support right within this area itself. Now, traders, when we look at a daily candlestick chart, and this is, as I said, in straight candlestick format, you do see this market that closed a little bit higher. It's forming what's known as a piercing line. Piercing line is going to be typically what we are looking for at the bottom of the market, but we've got to get confirmation. Traders, as you know, a confirming candle on a two-day pattern, such as an engulfing bullish piercing line of that nature, is going to be that following day where you get a higher low, a higher high in that, and the market moves away from really the body of this prior red candle, the candle that started that piercing line right in here. So that's what we'll be looking at in terms of the marketplace over the next, we'll look at it on Friday, and then of course on Sunday as it reopens in Australia. Now, Silver actually had a nice showing today, and as you can see, let's go ahead and pull up our daily chart. You can see that it closed a little bit higher, 31.66, 32.41. That is our linear regression numbers, and that's based on a 14-day cycle. And as you can see, here's our current print, 31.66. The breakout would be, of course, above that 32 itself. Now, in terms of areas that we need to see this market hold for support and areas that I would feel most comfortable with looking at silver as truly breaking out are as follows. As you know, we have our stop. It is currently sitting below 3052. Why? Well, we've got the 61% retracement that's right in here at right around that point. That's the level of support we need to have it hold. Therefore, our stop, of course, is going to be sitting below that. Now, when the market did come down, it didn't quite go to the 61% level. It went closer to the 50% level. And as you can see right now, it is just under that. So I really would like to see silver close above on a closing basis tomorrow or through the evening session today and maintain price points above 3180. Realize that if we do have a scenario in which the U.S. economy is improving, it's going to have a different effect on gold as it will on silver. Silver being a highly industrial metal, of course, as the economy picks up, there's going to be more demand for that metal, and therefore it's going to react just a little bit differently, of course, than gold. And traders, for our final chart of the day, it is our Elliott Wave chart, but I have converted it into a Heikin Ashi. And the reason for that is because we are noticing some bottom indicators that we typically look for in the Heikin charts that give us some sort of an idea or clue that this market is finding good support. And let me draw your attention to right in here. This, of course, as I said, this one tick is a misprint, but prior to that is not. And so you get this green candle and you get these smaller bodied candles. Those are the types of candles that we look for as a market consolidates, because before a market goes and has a pivot point or a key reversal, it's got to have the former bearish trend slow down. The way I like to look at it is if you have a train that's coming into the station and is going to reverse and then go back to the previous destination, before it goes back to the destination, it has to stop. And these small-bodied candles are indicative of a trend that is beginning to lose steam and, in essence, is stopping. Maintain your positions and current stops. We will talk about stop placement in detail tomorrow. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.